on board then Mayuresh Joshi, fund manager at Angel Broking. He joins us on the show right now. Mayuresh, hi, good morning. Lots of talking points. And firstly, really, it's the collections from GST, which for a second consecutive month, they've seen a significant drop. Do you think this could be a niggling worry for the market, considering that it just, partly that this dip has come in because 200 items, the rates were slashed just last month, both in the 28% as well as the 18% bracket?
Morning, Aisha. Yes, I think that can be a concerning point. But largely, again, I think this was expected to probably go through in the transitionary phase once the rates were cut down. Now, I think how the Exchequer and the Finance Ministry probably tackles this issue is going to be extremely critical. And what I was also reading through industry reports is at the same time, I think they're a little bit worried in terms of refunds, probably also not getting processed in the right amount of time. So I think all these factors probably the Finance Ministry needs to tackle too. But yes, I think it was an obvious indication that with rate cuts, the collections will come down. But largely, again, I think what steps the government will take and with greater compliance, I think we should be able to achieve a reasonable amount of figure. I think what is probably getting made up is the direct tax collection, with the indirect taxes because of the GST implementation probably being very, very disruptive at this point of time. So again, I think a little bit of a cause of worry, but again, I think if the government takes steps in the right direction, which I'm sure it will, I think you will have stable reported numbers going forward.
Mayuresh, this morning we are talking about the ADG group of stocks. Siddharth and I were just having this discussion about how the delivery stats don't really matter given the volatility that these stocks witnessed in yesterday's session. But what are your clients, seeking in terms of an opinion just as yet? Do you get the sense that, there would be perhaps in due course enough reason to build an investment case for the group, especially for, some of the sounder businesses in RelCap, for example?
So morning, Tanveer. Again, largely I think with the announcements yesterday, and a clear disclaimer, I think we don't have coverage on any of these stocks in our coverage universe. But largely, again, if you look at the kind of expectations that the street probably has, both in terms of the plans announced for debt reduction as well as the kind of equity enterprise value that you're probably looking at, including debt. So in that sense, I think the figures probably look impressive. But what probably happens on ground over the next few months, specifically in the case of RCom, is going to be very, very critical. How he's able to probably execute all these binding contracts with a lot of bidders coming through for a lot of sum of moving parts for different businesses within the entity itself is going to be interesting. But again, I think there is no definite clarity in terms of how this entire process is going to get structured. And I think markets absolutely like clarity on all such issues. So I think the move yesterday, I think Siddharth and Manas and CK might be able to comprehend the technical move or the short covering that we probably saw. But I think a fundamental bias, unless we actually see something constructive happening and something playing out on numbers, which I'm pretty sure if the deal commensurates over the next few quarters in some or parts, I think the numbers should do the talking for the stock. For the other stocks and within the group itself, there have been developments. Reliance Infra, for example, I think the kind of deal that got structured with Adani, very, very interesting, because the kind of regulated equity is almost 2 times the base that it is working out of. It almost becomes debt-free if the deal does go through. And that probably is a positive, because the management also was very, very hopeful with EPC and defense probably doing well. Reliance Capital, again, some of our businesses, I think doing extremely well in a situation where real interest rates are extremely high. You're probably seeing a huge shift happening from physical to financial savings. So I think both their entities should probably do well. Housing Finance, the entity is expected to do well going forward as the entire onus of the government in terms of affordable housing picks up further steam. So I think selective pockets probably look well. Reliance Capital, for example, Reliance Infra, for example, where if the asset sale and monetization does go through, I think creates some amount of stability. And though revenues might overall fall, I think probably got at least a clean balance sheet. So I think selectively one should look at stocks. But again, I think RCom, no coverage on that. And I think, as I said, the numbers should probably do the talking over the next few months as further progress and clarity emerges.
Mayuresh, we've already seen under Chandra's leadership what some of the Tata Group companies have managed to achieve and how the stocks as well have performed. What's the one Tata company that you're betting at when it comes to your specific picks?
No, so out of the entire lot, and a fabulous turnaround effort by Chandra, which will obviously yield results over the next few quarters. Having said that, I think each of his group companies probably are doing well in its own field. So within the auto universe, my own sense is that Tata Motors still looks very, very reasonable, both in terms of valuations and expectations of volume growth actually aiding its earnings recovery. So what has actually happened in terms of JLR and the volume recovery that we've probably seen, I think that can be quite exemplary in the months to come. So the Chinese JV operations have stabilized. You're probably seeing better numbers come out both on North American front as well as the European operations. And as these numbers stabilize and show a reasonable amount of uptick, I think the consolidated earnings where JLR probably has lion's share will show reasonable amount of growth. And that would probably have a bearing in terms of the overall numbers that the company will report. From a valuation perspective, as I said, I think extremely reasonable out of the entire auto pack at this point of time. So if I have to pick and choose, I think Tata Motors is something which we still believe can be accumulated on declines.
Well, yes, Tata Motors has been, considered as one of the cheapest stock in auto space, but that's been, quite some time that's the case. Stock has been an underperformer, but of late has been doing well along with the rub-off effect of what's happening in auto sector. Pankaj?
Mayuresh, the street still seems pretty divided on Reliance. Just this morning, you've got Jefferies, which is maintaining its underperform rating on the stock with a target price of 790. You've got a Citi, on the other hand, which maintains a buy. They've got a target of 1,030. A large part of the move on Reliance has already taken place this entire year. Do you sense there's more headroom to go for RIL?
So if one has a long-term view, Aisha, I think, yes, there is still a reasonable amount of headroom. Yes, the stock has moved up in anticipation of its two core segments doing exceedingly well. And the two core segments, which is petrochemicals and refining, have done exceedingly well. Now, as a few projects which were about to get completed by the end of this quarter and next, you're probably going to see more accretion happening on these two core segments of their business in the quarters to come. For the large part of their capex, both in terms of their core business as well as the telecom part of the business, is largely behind them. Now, if they're able to sweat these assets very, very carefully on the core side, my own sense is that the numbers that they will churn out can be far better, because a large part of the telecom capex is behind them, and the expectations are with the kind of ARPUs that the company is reporting, which is a tad bit better than what Bharti and Idea reported at this point of time at 156 odd rupees. I think you will see a reasonable amount of collections even on the telecom front, and with a sustained capex program, my own sense is that the consolidated ROEs should show signs of improvement. So I think a large part of the gestation of numbers which are expected in the next 2 to 3 quarters in the price, but we largely remain positive on this stock.
Okay, thanks very much for giving us your views as well. Some of the